Good morning. My name is Scott Redler, Chief Strategic Officer at T3Live.com.
And I'm Chelsea Oliver. Welcome to today's morning call. We have mostly red arrows around the world today, as yesterday's Fed minutes were more hawkish than expected. The US dollar rose and commodities got hit. Europe broadly lower as the DAX tried to rally, but still down over 1%. And Asia down, but not extreme. Scott, it looks like we still have some headwinds overseas.
Yes, I feel like every time I look at the handheld at 4:45 in the morning, I'm always seeing Asia lower, I'm seeing Europe lower, so that doesn't help our U.S. markets. But, you know, like you said, the DAX was down, I think, like 1.6%. Now it's only down about 1%. And Asia wasn't really that bad, but it had a pretty big down day yesterday and couldn't bounce much. You know, we talk about headwinds overseas. This trend has been for a while now. If you look at the chart of the EWG, you know, you can go back almost to, what is this, almost 2 years now, where you're just like kind of trending and trending and trending down with a few bumps, you know, higher, etc. But actually, as I draw this, you can see that, you know, this almost broke this downtrend and has come back, but hasn't really fallen apart. You know, if you want to look at this tactical move off the lows, you know, it's at like one of these spots where, you know, does it accelerate and really fall apart, or does it try and hang in there? But at this point, it is below all the moving averages, so the DAX has been under pressure. And then if you go to China, the FXI, you know, all you do is hear, you know, about a slowdown, a hard landing, and obviously the FXI has been under pressure and below the 200-day and not much support. You know, for a while it helped our futures because you had a snapback that got broken, and now the question is, you know, will it put it in a higher low and at some point try and get better? And I guess the jury's out. The jury's out for now. Until I guess this gets back above, okay, this 8-day moving average, which has been below, it's not going to help whatsoever. But if you can get back above this and get some kind of bounce, maybe, you know, looking in the morning, you'll see, you know, Asia up, and then that would help our futures. But, you know, at this point, it is what it is.
S&P futures are off lows, but down 4 to 5 handles after a very choppy session. What are some levels to watch here today?
The key word you just said is a choppy session. And yesterday, the S&Ps, they basically went around that pivot of 2040 3 or 4 times, testing both ends of the range. And like you said, I think we were down about 10 handles at 445, and now we're only down about, you know, 5 or 6. So we're still hanging in there. You look at the chart of the SPX, and you will see lots of different ways to navigate this over time. You know, we had an awesome double bottom here, quick rally up. Here was your, you know, your conviction or your commitment to it, and then from here we were above the 8 and 21-day moving average for almost 2 months, and then look what happened here. We broke the ascending channel. That means risk off, take a little bit of care. It might be choppy, and then from there we've talked about this head and shoulders top pattern and how you have the left shoulder, the head, and now this could be the right shoulder. But at this point, we're not getting much traction. Okay, the bears are having a hard time. Let me just get it close. Getting below support. Okay, couldn't do it here before rallying at the 21-day. At this point, we're now below the 21-day. So for today, I guess here you go. Write down this pivot. This pivot is 2034. Okay, it did break this yesterday to give you a small little trade of below that 240, but 7 handles before coming back up. You know, and then there was also a move almost to test this little area. So here we are again. You know, very, very choppy, where it seems like they always want to, come back to the VWAP. So the question is, you know, with option expiration tomorrow, and probably a lot of options around this 2050 area, you know, do we get a lot of upside? Do we get a lot of downside? Probably not. So I would not overtrade it today. Just know your levels, and if you want to break it down quickly into, you know, the 5-minute chart again, you know, that could be helpful. Okay. Basically yesterday, you know, you could just see, you know, how you had to navigate this. You know, you had a move off lows all day long, and then as soon as the minutes came out, pow. Then you had to look at this little 5-minute red dog reversal right here, came up to old resistance, and now, you know, it seems like actually a little bit of a W here. So for this, I would say here's your 242. So now if this were to hold, you know, and start to take this out, maybe your next spot for an active trade today would be for it to go green and then push closer to this 2052, which, you know, could be a magnet. So this is more of like just a more granular look at yesterday, where you trended up, failed, and now we might have a double bottom type action here where this morning can give you a higher low, and then if it pushes through this 2047, you get a bit of a day trade up to 2052.
As mentioned before, when the hawks fly, a certain playbook comes into play. Commodities closed on lows yesterday and are still down a bit this morning. Scott, should traders who went short yesterday cover some and hold some?
Yes, but what you mentioned there, what's important is the commodity or the hawk's playbook. It's like a dove's playbook when they're not going to increase rates, or they might put it off, and then when they're hawkish, that means that they look to the June meeting that might increase it, and when the dollar goes up, commodities go down and banks get bought. So, if you knew that playbook real fast yesterday, as soon as that started, you were able to get short oil, get short some oil names, and you did okay. Same way the banks ripped. So at this point, I think there are some guys in the VTF. Everyone's talking about going short oil. I think Sperling short oil also. And, you got a little bit of a good trade into the morning. And now what I usually do is I cover some, and then I see if it remains weak to then see if you weren't short oil and you thought you would get another down day, how you would enter and add more for more movement. So you look here at the USO. Why would traders be short oil? Okay, let's take a quick look at this trend here. Okay, why would they be short oil? One, obviously a hawkish Fed. Two, okay, technically you had a small little red dog reversal here in the USO, right? Traded through a prior high. This high here was 1193. Put a high in, some guys would get short right there, and look how you extended from the 8-day. So at this point, this would be a spot that probably tries to hold. I was looking at 1150 this morning, and then here's your 8-day. So if you're not short, overnight, because you don't take things overnight, etc., see if it can't rally. If it can't rally, maybe you get a little bit more downside to here. If you want to cover some and hold some, I can't see this being what's the word that I'm looking for? It could happen, and it could even get to here. So if you have a good entry here, this might even be your swing trade. You could stay short until this gets taken out, and maybe you even get more. Some guys went long the DWTI, which is the juice. DWTI is the triple ETF. I remember when the double bottom happened and we were all shorted right here versus that. And, if you took it off the next day, made money, but if you kept it on as a swing, you made a heck of a lot more. So now here we are, on the bottom side of it, not saying we're going to get this huge, crazy rally, but if oil wants to continue to come in a little bit, maybe down to 46 or so, here is a bit of a closer look. Here was your red dog reversal yesterday. I know I played with it a few different times. Your entry would have been 73.30. Here's your stop. Closed okay, now it's opening up. So maybe the first spot here would be to fill this gap around 81, and then you'll see the resistance that's closer to 83 that it wasn't able to get through last time. So just for a tactical trade, oil's come a long way to the upside, and a little bit of a pullback isn't the end of the world.
On the flip side of that hawkish playbook, we have the banks, which closed on highs yesterday and could come into play in the sessions ahead. Can you go over some of those bank names and what levels need to hold in each in order to show that commitment?
Yes, and we talked about JP Morgan yesterday. JP Morgan raised their dividend. Jamie already bought stock and the company's buying back, so I was like, in order for the banks to get some momentum, some levels have to be broken. So typically they test that, or they have to hold above that. So between that with the JP Morgan early move and then of hawkish Fed, you had a little bit of a igniting blast off. So let's go over levels that need to hold for maybe commitment to then continue. Let's go JP Morgan first. Here's JP Morgan, best in breed. If you had to be in one bank, this is the bank to be in. Yesterday, about 24 hours ago, I talked about this spot with Chelsea. Said if the banks are going to get any real love, it's got to clear this pivot. Not only did it clear the pivot, it took off almost right back to old resistance. So at this point, do I think it blasts off above this on a second day? I think it might take a little bit of time. So what would I like to see hold? See about half of this move. Okay, this would be, I would say, somewhere around 63. And if you want to give it more room, this was that prior pivot. So in order for JP Morgan to keep commitment to this, you want to hold 50% of this igniting bar, and then at some point it could take this out and then that. Citigroup, we went over this yesterday also. The descending channel here. Well, look how nicely this descending channel ignited to the upside. Some people are long it for follow-through. Might not happen today because of the size of this move. So same thing. You could also go like this with your 5-minute now. This is how you use different time frames. You go to the 5-minute chart, you see where the last move came from. So I would say, if Citigroup's going to make it easy on you, it should hold right here. Okay, it should hold this 45.50, and I would say some would probably, if you're long overnight, start getting a little bit worried if it were to break below 45. So holding above, I would say 45, if you give it room, is the spot that I would like to see it hold, and then if it does, maybe you get a little bit more follow through either today or maybe Friday. But at some point then, we'll be playing this game where can we take out monthly resistance, and that is a lot higher. And I'll give you one more. Goldman Sachs, not as strong as a Citigroup or JP Morgan. Here is your old pivot. In order to get back there, or in order to even take this out, okay, you're going to need to hold just say 157. So my thought is, you had a decent bar in the banks. Maybe they were up a little bit too much to be up today, but if they hold in well, use yesterday's high as a pivot for more action. And then at some point, if the market holds, 2040 and the banks stay strong, these pivots will come into play.
Bios have been acting a little bit better recently and closed on highs yesterday. Will you be looking here for the sector to go green?
Yeah, I think that yesterday they showed some strength. Remember on Monday there was like Merger Monday, and it ignited and it had to hold 50%. Well, it did. So even though the bios are broken, and even though it's a laggard group, at times is better tactical situations for cash flow. So if you look here at the IBBs, and what do I mean by technically broken? What I mean by technically broken is look at the longer term chart. Okay, this trend was broken here, and then you had a continuation here, and then you had a continuation here, and then remember the bounce back. The bounce back, support, became resistance. So now it's come back, trying to hold here, and now you go closer. Look how far off the lows are, not too far off. So it's been a laggard sector, but every now and then there's tactical trades, and they change a little bit. So at this point, okay, I think the IBBs are down like $1 or so. Yesterday it held higher. Okay, this was your igniting bar on Monday. Inside day held, and now we'll see if it can get above this. So if it could hold 260, okay, maybe it goes green. And if today's a stronger day, maybe it goes above this 263.75. But I think taking trades and not trying to add too much on strength is a better strategy than adding after something's working that actually goes positive. So take a little bit of care of adding strength.
In high beta tech, there are some opportunities for stocks like Facebook and Amazon to go green for a trade. Do you think that this can happen again today?
Well, yesterday futures were lower. Market was testing that 204, and Amazon and Facebook both didn't go down. So they went from down, like Amazon went from down $3 to up $2. That's a $5 move. That's pretty good. Facebook went from down 50 cents to up almost 80 cents. So those are the type of things you could find. So today the futures were lower. Whoops. Today it could be similar. Let's just go to Amazon first. Amazon, just pulled back 30 points. For Amazon to pull back 30 points doesn't happen that often. And what did it do? It came back and tested the prior high right around here. So I would think for Amazon to be any good, it has to hold above 688. That's the pivot I would write down. And and maybe try and go green again and start building a new level here. So I think it's down $2-3 now. Maybe it goes down $2 to up $2, and that could be some cash flow. Use your 5-minute bar. Facebook, same thing. Facebook, I think, is down 30 cents. It came back in to retest this high right here, this other high, and the earnings gap. Okay, it couldn't break above 121. That kind of sucked last week, if you guys remember. But now there was a different way to make a trade here. So at this point, it's down 30 cents. If it were to take out yesterday's low of 116.73, you get out of the way. But if it gets below, it comes back above it. You know that drill, kind of like here. But I don't even think it gets there. So maybe it tries to go green, and then if the market hangs in there, at some point, it tries to reclaim this spot to get back into the more mid to upper end of this upper range. So I will look at both of these just for a quick cash flow trade, Chelsea. But I'm not going to be looking to get a huge move, because huge moves are hard to find, especially when you have option expiration tomorrow. But 60, 70 cents could pay the bills.
Right.
Maybe.
Yep. And Tesla came out yesterday with an announcement of a secondary. It immediately got hit and regrouped and is only off small this morning. Will you be trading this today?
This stock got me good yesterday. Remember, I was like, oh, Goldman Sachs upgraded Tesla. It's been weak. Wouldn't it be cute if they're doing it so they can get it up so their friends can announce a secondary from higher prices? Well, I didn't think they would do it all in the same day. I actually had Tesla on the close yesterday, and I didn't even really trade it that much. I was like, okay, if it has a few more points, I'm sure, until they want to, bag everyone. But P.S. after the close, they announced a secondary. I got out of it. I lost money. And then all of a sudden, 6 o'clock, 7 o'clock, I'm barbecuing at home, and I see that it's almost flat. So they pickpocketed me also. So I'm going to try and put that behind me and know that the stock has come in a lot. It seems like the price is close to 208.80, which is in the money. So anyone thinking it was going to be way in the hole and short might have to cover. So it might be an opportunity today. So before coming in here, it was down like $2, and then it was almost even flat. If you look at the chart here, the stock was as high as what was this? This was almost up to 270. It broke its momentum trend right here. Came in, so they knew a secondary was coming, especially with that crazy demand on the Model X. So now here you go. You have an inside channel, and then at some point, if it were to take this out, maybe there's a nice little $10 move here. So I was hoping to buy it maybe around 208, 209 if they tested the secondary price, but it's already above that. So use your 5 and 15-minute charts to see if there's enough strength, enough volume to take this out for a move closer to 221.
Apple has acted better ever since the Berkshire Hathaway stake announced Monday. What level keeps the momentum here technically?
I think each day we've talked about what had to hold for it to hold and go green, and every single day this week there's been a trade there for the longs. It's also pulled back here and there throughout the course of the day, but it has acted better. You look here at the chart. You had this overthrow move down below 92. I remember overseas we were looking at it short 92. Then all of a sudden, you had an inside bar, and so it looked like it could have continued, and then boom, the Berkshire news. So hopefully you switch some gears here. It wound up holding higher here, and now it held higher again. I even think it's green with the market down a little bit. I don't know how much it really will take off, but every day there's been a little bit of a trade there if you're patient, and at this point there's some resistance here. So if it happens to get above this pivot of a 95.21, the market wants to be strong, that the 21-day is about a point higher. So not bad if you're trying to just kind of scalp your way here. If you're long from this and you're still with it, now stay with it as long as it's now back above the 8-day. Here is below the 8-day for weeks, and now you're back above it. So it reclaimed it. So on a tactical basis, Apple's acting better. On a intermediate, on a macro basis, is it acting better? No, look where it came from. But on a tactical basis right now, as long as it's above the 8-day, we'll see if it can continue to provide some opportunities each day.
There were a few earnings out after the close. Do you want to go over some of those and some of the levels as well?
Yes, I know a lot of guys like to trade the news, so I'll just put out some levels. And first piece of news I think was Cisco. Cisco came out, decent report. It's up. Stock wasn't really priced for perfection. It's been in, you have a well-defined resistance range. Do I think it takes this out now? No. But can it gap up and hold and at some point take this out and be more of a chosen one? Yeah, I think so. This could go back on the mega cap list. But for today, there is some resistance around this 28. So I wouldn't be buying it. We'll see what happens thereafter. CRM is a different story. CRM, huge numbers, more high beta. Look at this also, above the 200-day, which is better than most names. You have prior highs here at, what is this, 82.50. So in order for this to get and stay above 82.50, for momentum, that's what has to happen. So it's already well above this pivot, okay? Lately it's been hard to trade these the day of, so you want to see what kind of gap it has and doesn't fill. But if it happens to get above this, the market stays sort of strong, maybe there's a little bit of momentum. And last one I'll talk about is Walmart. Kind of cute that Target was horrendous yesterday, so everyone thought Walmart would be horrendous. Look where Walmart was, what was this, about a year ago? So now you'll see what happens here. I think it's up 9% for Walmart. So there's a boatload of resistance here. Okay, this is your 70, and all your moving averages right around 69. So it looks like it has room to like 69-ish, and then you'll see what happens within here. And I would also wait here. But don't just short this, because look how many people are trapped. If Walmart opens up and holds up and doesn't go down, it might be a little tougher for the spiders to stay down. And yesterday, just in closing, Target got crushed, but this is the type of thing where it didn't open down and close lower. It opened on the lows, closed near highs. So maybe there is a potential trade here. If it can get above the earnings pivot high of 68.62, there's a big gap here, and it's come a long way down from 84, and still, my wife likes shopping at Target, so it's not such a bad place.
Yeah, I like Target.
You like Target? What do you like better, Target or Walmart?
I don't know. They're both, maybe Target, but Walmart has such a larger variety, I guess. It's a larger store, so
Okay.
I don't know.
All right, if they were both next to each other.
Target.
All right, same thing.
Target.
Target. There you go.
Yes, and we've been mentioning pressure on oil lately. There's also been pressure on the gold and the miners. And they both got hit hard yesterday. Has the complexion there changed?
I think short term. You know, we were talking about how they were getting a little choppy and heavier, and then even a little crowded. I think in the last month, everyone talked about how gold has to go to 1,300 plus this and that, and you know there was no traction. So yesterday, with the Hawks playbook, with dollar going up, commodities going down, if you sold gold or you sold the miners quickly, you're getting paid a little bit after after hours or this morning. So you look here at the GLD, you'll see, last time you had a nice little wedge pattern was right here. Okay, that was when it was above the 8-day, above the 21. They gave you follow through. That's when I put on the call spread. Bought the 120s, sold the 124s, and today, once I heard what happened with the Fed, I got rid of my 120s to make a little bit. Obviously not what I thought it would be, but anyway, here's your upper wedge that broke to the downside, and now I guess you'll see whether or not the 50-day holds, which is closer to 119.50. Still looks okay. Look where it came from. It's not like game over, but just not a lot of momentum and a better day trade, short versus long. Then you look at the miners. The miners had a huge engulfing bar. Okay, most people made decent money here yesterday, and you saw the 8-day trend change. Look at that. Boom. Okay, couldn't get through the highs. Now it's below the 8 and 21 days, so at least it got you out. If some of you guys got short, and the 50-day doesn't come all the way until here. Okay, so if you're short overnight, maybe cover some, and then if you can, as long as it stays below this spot, try and stay short. It'll be on the right side of this upper channel. And for those of you that took the nugget, who love the extra juice, you got paid handsomely. Yesterday and now today, it's down a few bucks. Here's your next support, closer to 78. It was a big move, so it might not just all the way get down to here. So I would cover some in, here, kind of the same way. As long as it stays below this, which is half of yesterday's bar, you would think that people would start trading this more to the short side versus the long side.
Do you have any more closing thoughts since we're near the end of the week and there's the option expiration tomorrow?
I think this was like a frustrating week for a lot of people because there was no follow through. When they looked good, they went down. When they looked bad, they rallied, and lots of divergences. So I would say, maybe next week is a better week. But today, yesterday came in, all I was trying to do was short 204, and you had a move to the downside, but you had to take it. Today, I feel like I have a little less short on the brain, more of looking at to see if some of these tech names can go green and expect a little bit less. If you want to take a quick look at the spiders, go over some spider levels before I leave you, because we went over the S&P. Your spider pivots are right here. Okay, yesterday's low in the spiders is 203.63. So that is the spot to trade against. You got a small little push below this spot yesterday. Okay, below this low here yesterday was 204.23. So it did give you like 60 cents below, and if you started earlier, it's okay. You still have like this descending channel here that's been in control. But a lot of red, green, and that's not the easiest for traders. Here, remember this, tried to break out. Everyone got long thinking we can go back to highs, and then failed and got one lower. So it has not been easy within this range. It's still, you could still see the head and shoulders top pattern, but typically when you break and close below a neckline, you're thinking that longs get stopped out, shorts come crashing in, and you get a clean move. And that's not what's happened. It's been very choppy. So with that being said, try not to add on strength. Try not to press lows unless you really see the perfect storm. Chelsea, yesterday I was like, we're not going to see a breakdown if the banks are strong, and retail is okay, and oil is up, and that was the criteria yesterday. So how could you see downside follow through? Plus you had some high beta names. Okay, so today looks like a mixed landscape. So it might be another choppy trade, and I would tell everyone to expect a little less, and then end the week, and maybe we'll see if things change with the new hawkish playbook moving forward.
And that's all from us today. Everyone have a great trading day.